Yes, that is extraordinary to me. So I looked at a distribution of realized volatility. And we are in, over the past 20 years, like the 5% tail of low volatility. And the VIX is at a pretty moderate level given the risk that we're surrounded with. So even though the Iran situation might be a low probability, it's a big negative if it occurs. And you have to multiply the probability times what you lose in the downside event. That's pretty substantial. And Europe is very substantial. Within the U.S., I think it's naive to think that the U.S. is immune to all these issues. It is very much connected to Europe, and it's very much obviously connected to the price of oil. So it is odd if you look at these at the implied volatilities or the realized volatilities that they are so low. And usually what happens is that volatility spikes when markets go down. And we've been having a market that is, depending on where you measure it from, there has been some recovery in the U.S. market. So you expect volatility to go down by somewhat, but the level just appears to be low. So what does that mean? That means that it is a very good time to put on so-called tail protect strategies. Okay, so as a portfolio manager, and if you look at my course material, what I teach in terms of both portfolio management and risk analysis, that you need to take a view that is three-dimensional in terms of your asset management. So you want to manage the expected returns, the volatility of your portfolio, and also the skew of your portfolio. So think of it as an efficient frontier with another axis, which has got skew on it. Okay, so you need to manage that skew. Very important. It's managing the tail, the same sort of thing. So as a portfolio manager, you're sitting there and you see that volatility is relatively low right now, yet the risks that we face are very high. That means that you can protect some of that tail at a cheap price. Okay, so this is a great time for so-called tail protect strategy. So the simple thing, given you think of implied volatility as being low, therefore, simplest thing to do would be, let's say, buy a put option on whatever, something close to your portfolio. And it doesn't have to be at the money, it can be out of the money, because the tail is extreme events. So given that implied volatility is low, it is feasible to do that. Or you go, let's say, long the, like a VIX ETF, which in general is not a great strategy. If you look at the average returns of those strategies, it's miserable. But that just takes the average return. It's a different question if you can buy at a fairly low level of VIX. Does that make sense? So if you're buying VIX when it's 80 long, then you're going to have a negative return if you hold it. So it is a time, I think, for portfolio managers to seriously consider covering some of that tail. It's an opportunity, given the volatility is low. It's hard to explain. I cannot explain to you why volatility is exactly as low as it is. But I think that it's basically, in my opinion, too low, which is fine. That just means let's put on some tail protect. It's always amazing to me going out and talking to asset managers that, especially the longer term institutional investors, that they don't really think about managing the tail. So, oh, we're long-term investors. Like the well, maybe I shouldn't give examples, but we're long-term investors, so we can write it up. We should be in a situation where we're writing insurance. So but then the event occurs, and all of a sudden they're not long-term investors. But they've got some payout to make that they can't make, or the value of their fund drops by 25%. And say, oh, gee, I wish I'd put on some tail protect. And then right in the middle of a crisis, it's so expensive to do. So it's better to do it at a time where volatility is relatively cheap, and this is a great time to actually do it. Yes, the US is on a course that is more favorable than Japan or Europe right now, but as I said, that does not mean that they're immune to a shock that would definitely unsettle the US market.